I wanted to get this in front of you to show you the difference between the original design that we ran and the redesign that we did based on the conversation that we had about, number one, what is your comfort level with an out-of-pocket payment, and two, what did you want the peak collateral to get at? So hopefully this is going to be in line with what you wanted to see, but let me go back to the original design for you. And so this was a combination of a second to die policy as well as a single life policy, one for estate liquidity and then second to die for estate tax purposes. So the original design had $1.3 million a year for 10 years being financed by the bank. The original cash surrender value of the policy was $677,000, and we were starting at a $15 million total amount of death benefit. Again, most of that was single life and a smaller portion of that was second to die. When we did that, you were projected to pay, roughly $109,000 a year out of pocket for a substantial amount of time, 20 years in this example. Collateral started at $642,000, peak collateral got up to 1.1, and we had that discussion about, what was your maximum exposure that you wanted to see? What was your total amount of tolerance that you had available? And this was above that. So it was uncomfortable, and I'm glad we had that discussion. So the redesign is this one right here. We've had to lower the death benefit from a total amount of 15 million to just over 10 million. 3 million is the second to die portion, 7 million is single life. So still pretty good. Interest payments or out-of-pocket payments, what you told us is get that down to $75,000 a year for 10 years. Again, not a requirement. It can be decided on every single year. The more you pay, the better. The less you pay goes towards the loan, increases the gap. And I think this is really what you want to see right here. So starting collateral in year one is less than $500,000, which is underneath the number that we had discussed. Peak collateral in year five is at $695,000. So well within the comfort range of what you and I discussed of where you wanted it to be. And again, the loan here in column 13, no personal guarantee, non-recourse, limited guaranteed, some of our lenders, but we'll go the no personal guarantee side. For the entire amount of the loan, show you exiting the loan, and look at column 15. And this is the purpose of what you were trying to do. Column 15, net death benefit. So after all loans are paid off, after everything, we're still hovering 10 million and then getting 11, 12 million dollars worth of net death benefit, income tax-free, estate tax-free. So I hope this is in line with what you were trying to look at. Let me know. We'll talk soon.